In this video, I am providing you with more value than the majority of paid courses available on the market today. I am meticulously breaking down the 9 most influential trading psychology lessons I have gathered throughout my 9-year career, insights gleaned from meticulously journaling over 1,000 pages of trade data. These are the fundamental mindset shifts that propelled me from being legally bankrupt at the age of 20 to generating over $3 million in trading profits, a feat I can substantiate with proof. If you find yourself struggling with the emotional and mental hurdles of the market, these 9 minutes might be the most transformative of your entire trading career. Lesson 1. The power of the macro perspective. The first and arguably most vital lesson is to zoom out and view trading through a much larger lens. When I first began with a modest $5,000 account, I was dangerously obsessed with my daily P and L. My equity would swing from $5,000 to $7,000 and back down to $5,000 in the exhausting ripsaw pattern because I allowed the outcome of every single day to dictate my mental state. I eventually realized that trading isn't about winning every day, every week, or even every single month. It is about achieving victory in the long term. I have navigated months where a profitable trade seemed impossible, only to be followed by months where I cleared over $100,000, including my record day of $89,000 in profit. Interestingly, that massive win came right on the heels of a losing streak that had me doubting my entire process. When you adopt a macro view, you understand that a single loss or a series of setbacks is irrelevant as long as your system is statistically sound over time. Never evaluate your worth on a trade-by-trade basis. That is exactly when emotions cloud your judgment and you start forcing setups that don't exist. Trading is a marathon, not a sprint. You win it brick by brick and day by day. Lesson 2. Eradicating expectations. The second lesson is to completely eliminate expectations from your trading routine. In the past, I used to set rigid daily financial goals, aiming for $500 or $1,000 a day, which pressured me into taking low-quality trades just to meet a quota. I mistakenly believed that being a real trader required 3 to 5 trades every single day. Now, I understand that some days simply offer 0 valid setups, and walking away is perfectly acceptable. This also applies to the outcome of individual trades. If you expect to win and the market hands you a loss, that psychological pain often triggers destructive revenge trading. I learned this through a painful $12,000 loss on a Boeing trade that left a physical hole in my wall at a time when I couldn't afford such a loss. The ultimate mindset is to expect nothing. By doing so, you are emotionally insulated against losses, and your wins feel even more rewarding because you know you simply followed the plan. This is why I still drive my humble Honda on certain days. It keeps me grounded, reminds me of my roots, and prevents the deadly poison of overconfidence. Lesson 3. Education over equity. A lesson that fundamentally shifted my trajectory was to stop focusing on the dollar amount and start prioritizing what I could learn from every execution. When I was 20 and broke, the only thing on my mind was hitting that first million. Ironically, consistent profitability only arrived once I stopped staring at the money. Every loss is a lesson, not just a deficit. We don't take losses in this game. We take lessons. Similarly, every win offers data for improvement. Your goal should be a 1% refinement with every trade. This is the primary reason I am a fierce advocate for journaling. Those 1,000 plus pages of notes weren't a diary of my wealth. They were an archive of my mistakes, a tool for accountability, and a way to see what the data actually supported. The money is merely a scoreboard. It isn't the game itself. The true game is the flawless execution of your system, regardless of the immediate outcome. Lesson 4. The A-game requirement. Lesson 4 dictates that you should only trade when you are operating at your absolute peak, both mentally and physically. Every morning I conduct a comprehensive mental scan. Did I sleep well? Is my focus sharp? Am I feeling anxious about external events? If my anxiety is too high or my focus is lacking, I simply sit the day out or trade with significantly reduced size. Looking back, the days I felt off were historically the days I suffered my largest losses. This is why I am so militant about my morning routine. Waking up at 5:30 a.m., hydrating, and exercising to prime my brain for the market open. I sometimes fast for 16 to 20 hours because, as I like to say, a hungry dog fights harder. Your physical condition is a direct precursor to your performance. If you are stressed or exhausted, your decision-making will inevitably crumble. Building discipline with your body is the foundation for building discipline in your trading. Lesson 5. Pickiness as a profit driver. The fifth lesson is that being extremely selective, or picky, is a direct path to profit. In my early days, I tried to trade everything. Penny stocks, blue chips, momentum breakouts, thinking more volume meant more wealth. Today, I only trade a tiny handful of tickers, specifically SPY and QQQ for options, or NQ and ES for futures, along with Tesla. I have studied their personalities so deeply that I know exactly how they move. I would much rather miss 100 mediocre setups than miss one perfect A+ trade. Trading is identical to fishing. You don't reel the line in every 5 seconds because the fish aren't biting immediately. You sit with patience and wait for the big, obvious opportunity. This level of pickiness drastically lowered my losses and spiked my win rate. If I don't see at least 2 or 3 strong points of confirmation, the trade simply doesn't happen. Lesson 6. Capital preservation above all. Lesson 6 is the absolute rule. Protect your capital at all costs. This was a lesson learned through significant pain. Our primary job as traders isn't actually trading, it is risk management. The elite traders aren't those who make the most on their winners, but those who lose the least on their losers. In November of 2023, I was up $900,000 to $30,000 for the year. I got overconfident, started chasing $1 million year milestone, and ended up giving back nearly $90,000 in a matter of weeks, finishing the year at $842,000. While still a great year, those losses were a result of forgetting that my #1 job is to not lose money. Profitability is a natural byproduct of managed losses. I tell my students, show me your losses, not your wins. If you can manage your downside with hard stops and non-negotiable risk rules, you stay in the game long enough to eventually win big. Lesson 7. Adapting to the trend. Lesson 7 is a simple warning. Stop fighting the trend. For years, I had a bias for shorting the market. I loved the stairs up, elevator down velocity of a crash. However, I learned that fighting a primary trend is the fastest way to liquidate an account. The market can remain irrational for much longer than you can remain solvent. If the trend is bullish, look for longs. If it's bearish, look for shorts. Don't try to play hero by calling tops or bottoms without a clear reversal signal and strict risk parameters. This ties into the fact that the most adaptable traders survive, not necessarily the strongest. The strategies that printed money in 2021 were useless in 2022. My best years occurred when I stopped being stubborn about my bias and started adapting to exactly what the price action was giving me. Lesson 8. The bus mentality and FOMO. The 8th lesson is to realize that missing a trade is perfectly fine. Market opportunities are like buses. If you miss one, there is guaranteed to be another one coming shortly. FOMO, fear of missing out, is perhaps the single greatest account killer in existence. I used to force myself back into positions after missing a move, usually resulting in a loss. Now, if I miss my entry, I simply accept it, take a break, journal the missed opportunity, and wait for the next day. The market will always be there tomorrow, but you won't be if you blow your account or destroy your mental capital by chasing price. Developing the maturity to accept a missed opportunity without self-criticism is a hallmark of a professional trader. Lesson 9. Accountability and the power of partners. The final and 9th lesson that ties this entire philosophy together is that accountability is everything. You must choose discipline over dopamine. If a trade fails, you cannot blame the market, the algorithms, or some guru. You must look in the mirror. My trading transformed when I began to be brutally honest about my own weaknesses. I eventually grew tired of breaking promises to myself, so I grabbed a physical notebook, not a digital one, and wrote down a constitution of what I would and would not do. There is also immense power in having an accountability partner. Find someone who isn't afraid to call you out when you aren't on your A game. We often lie to ourselves in the mirror, but a true partner will hold you to the standards you set. Conclusion. The light at the end of the tunnel. These 9 lessons from my 9-year journey have completely revolutionized my life. They took me from being flat broke to having the freedom to trade from anywhere and, most importantly, the ability to provide for my family. Trading is an incredibly difficult path, but there is a massive light at the end of the tunnel if you remain patient and stay the course. If you want to dive deeper into my specific system and how I apply these psychological pillars daily, click the link in the description for my free training. I pride myself on having successful students because, unlike many, I actually trade and prove my results with real statements. I preach discipline over dopamine and provide a blueprint for you to build that discipline yourself. Pray, grind, focus, and repeat. That is the formula. Hit that subscribe button and let's get to work.